Today we are in London in EBRD conference, and we see that there is a big energy and synergy between the countries and the companies of EBRD Invest. I'm glad to see this vibrant energy because at the end of the day, trade finance is a milestone to promote SMEs, to promote countries' economies, and to have secure funding facilities. So our duty here with EBRD, FCI, and many financial institutions is to support the trade, to support the economy, to support the population, I have to say. Factoring is a magic product, according to me. I always keep telling this. Factoring is magic. You know why? Because we do have 3 services under our umbrella. We are providing credit cover, we are providing collection services as factors, and we are also providing funding. So factoring is the only product in the world having 3 kind of important services. It's a magic. So this is why factoring, especially during these volatile times, during these problematic periods, especially during the inflationary period, factoring become a vital product to finance the country's economy. It is not only for small and medium-sized companies. It's beneficial for country's economy. You know why? A country's exporters export their raw materials, export their finished goods, export their resources. If they fail to get their money back from the debtors, what happened? The companies losing money. Not only the companies, the countries losing their own equity. This is why factoring protects the country's trade, protects companies, and protects the debtors as well. At the end of the day, factoring is supporting a continuous trade globally. So this is why we are one of the most important products during the crisis time. And when you look at the factoring volumes since years, you see that the main increases, the main volume increases in factoring happens during crisis time. For example, during 2008-2009 global American crisis, factoring volumes jumped a lot. During 2000 crisis, factoring volumes jumped a lot. You know why? Because at these turbulent times, the companies prefers to cover their risk, and they come to factoring companies to protect themselves. This is our magic, I must say. First of all, it's a bit heavy paperwork. It's a bit detailed work because we are funding the sellers invoice by invoices. So it's not a lump sum transaction. It's a detailed transaction. This is why we have difficulties to have companies using factoring. But at the end of the day, factoring is very good for receivable funding. The problem is to raise funding to finance the sellers. At the end of the day, factoring companies are serving to sellers for, as I said, 3 services: credit cover, collection, and funding. The equities, the resources of companies, the factoring companies, are limited. We are not big banks. We are not conglomerates. So we need to have extra funding to finance our sellers. So the issue for factoring companies is to raise extra funding to finance our clients. At the end of the day, extra funding we can raise goes to our clients, goes to our real trade, goes to our trade finance receivable. So we should finance, and big banks, especially conglomerates, global banks, should support, according to me, should support factoring companies because we support trade.